So I'm Craig Martin. As you know, I'm the chairman of Dynam Capital, and we manage Vietnam Holding. Vietnam Holding been successful in winning awards over the years, and that's testament to the team's ability to find great stocks in a super exciting and interesting market of Vietnam. So we're a single country fund. So if you're looking for diversification, we're a great way for you to readily access one of the great growth stories in Asia. We deliver value by doing simple things well. We're a small trust. We're nimble around our stock selection and our portfolio construction. We've got a very actively engaged board and through many actions over the last 7 years to really narrow the discount to net asset value. So that's been done through regular share buybacks, through tenders, and over the last couple of years, a very innovative annual redemption facility. So investors through the London Stock Exchange Trust once a year can actually redeem at net asset value. So we've enjoyed the narrowest of the three investment trusts that invest in Vietnam, and actually narrowest of many of investment trusts in the UK. Our discount today is around about 8%, so that's wider than it's been for much of this year. So perhaps that's an interesting entry point for people who are looking at the growth opportunity in Vietnam. Next year, we're 20 years young, and the stock market in Vietnam is only about 25 years. And it's a strong track record. And over the last 5 years, we've delivered around about a 20% compound annual growth rate. So if you look at the indices, we're index agnostic, we're a value and an absolute return player. But if you look against the index, then we've delivered about 500 basis points each year of outperformance. And again, by doing simple things well. We've got a high conviction portfolio, typically between, say, 25 and 28 positions. We don't use gearing in the investment trust, and we're very nimble around the opportunities from the small, the medium to the large in the market. And really, Vietnam has some great macro opportunities in modernization and the industrialization of its economy, the growth in the consumer base, and urbanization as people look to move into the cities. Now, we're a stock picker, but we like these themes, and we're trying to find great companies that we can invest in that hopefully will compound our earnings over the long term for our investors. Vietnam itself has a lot to celebrate this year. Just earlier this month, it celebrated 80 years of independence. Not a smooth journey by any stretch of the imagination, as this chart shows, but it really does reflect the resilience of the people of Vietnam, overcoming challenges and positioning themselves for better things in the future. And earlier this year, the country also celebrated 50 years of reunification after the war that ended in 73 and then reunification in 75. And since that period of time, one thing has really stood out, and that's that Vietnam's success is not by chance. It's by policy and determined reform and resilience of its people. And that's a theme that's really coming to the fore this year in great ways, which I'll touch on. And that's good opportunities for investors. So Vietnam, large population, 100 million people, punching above its weight in Asia, as the first speaker said. Vietnam's an interesting economy. It's got tremendous growth drivers to it. It's a young population. It's digitally connected. It's got one of the lowest costs of fiber optic and yet high speeds in Southeast Asia. And the banks and the financial services companies are really delivering lots of products through digital means. And the retailers, who we also invest in, are really kind of leading advocates of the growth in e-commerce in Vietnam. And Vietnam's e-commerce is one of the highest growth rates across Asia. The other interesting thing from this chart, obviously apart from its interesting geography and position, and it's a country that more and more people are visiting. It's the highest tourism rate, I think, in Asia Pacific, the top tourist destinations, and many of you may have visited Vietnam. But it's also its modernization and its urbanization. It's still got a relatively modest level of people living in cities, just about 40%, which China had around about 2000 and then doubled again. So there's lots of opportunities in building new cities. There's been a lot of reform this year in changing the number of provinces and moving to create kind of super cities in Ho Chi Minh City in the south and its environs. So that's a great opportunity for housing, for schools, for modern trade, for infrastructure that really leverages economic growth. And what growth the country has enjoyed, 6.5% on average for the last 30 years, uh, looking to deliver maybe close to 8% GDP growth this year. So the envy of many, and at relatively low levels of inflation, 3.5%. So a tremendous level of real growth in the economy. And the country has attracted a lot of foreign direct investment over those 30 years since perhaps it came out from the cold and looked to open its doors through reform. The first level of reform called Doi Moi in the early 90s to really position Vietnam as a destination for manufacturing for the world. So the key investment themes that I've mentioned before, the industrialization, the domestic consumer, and the digitalization, as well as the urbanization, are going to be further catalyzed by reform of the domestic economy. Uh, hopefully a soon upgrade from frontier to emerging market status. The government's commitment to use the private sector as the driving force in the economy, and very innovative plans to create two international financial centers in Vietnam, one in Ho Chi Minh City in the south and one in Da Nang in the center of the country. So these are very ambitious, but these are going to help raise the opportunity for investors into the economy. So Vietnam's strong growth, as I've mentioned, the government's not happy, sit on its laurels at 6.5% GDP growth. It wants to push ahead into 8% and even higher. And that's with a vision to perhaps avoid the middle income trap that some countries in Asia may face as the population grows older before the people get wealthier. And Vietnam's done a tremendous job in lifting the wealth of its people over a number of years. But there's a real desire and appetite to use the domestic economy to drive that growth. We've benefited from foreign direct investment. That's been wonderful for Made in Vietnam, but the government are really focusing on domestic investment and consumption and see that as helping accelerate their economic growth. And to do that, they recognize they need to put in more policies and reforms, and they're very active in doing so. And I think in the Financial Times recently, when it said, the best responses generate the best returns. So Vietnam's been very responsive, particularly this year, in a changing global environment, to how to manage and accelerate its economic growth. So Made in Vietnam has generated tremendous trade surplus for the country over a number of years. So that gives it the room to grow and invest in its public infrastructure. It's a trading partner to many nations. Obviously, the US is a large market, and the US, as we're aware, has perhaps adopted slightly different trade policies to the open trade that we've been used to for many, many years. But Vietnam will manage this. It's not just beholden to the US, and it's also looking to see how it can trade with the US more, to actually buy more US products, goods, and services. But Vietnam also enjoys a strong position in electronics and mobile electronic devices, and many of these are kind of at low tariff levels or excluded from tariffs. So some of the key strengths in Vietnam are not going to be impacted too badly. Other areas, yes, will be hit by tariffs, but I think the country is resilient enough to take this on, and also to broaden its investor and export base. It's looking to the Middle East and to Europe and to Asia Pacific for continuing to diversify its trading partnerships. And that commitment to public investment, if people have traveled to Vietnam, or if you've seen Michael Portillo a few years ago riding the rails from Hanoi to Ho Chi Minh City, it's 36 hours on a fairly slow but very interesting train journey. That's going to be modernized in the years to come. And in the other urban rail areas, they're going to be modernized, and high-speed trains, greater focus on airport development, port development, and roads. And the government are really pushing hard. They tend not to have the same kind of problems as you have perhaps in the UK when you're trying to put in a high-speed network. They will have a determination and they will do it, and the people will be behind it because the people see the economic benefits from it. So it's not so much a NIMBY, but please put it near my backyard. Thank you. So the equity market is the way that we play the growth in Vietnam and the economic opportunities. And let's be front and center, for despite having all the great characteristics of a large growing emerging market punching above its weight, its equity markets are still classified as frontier. So if you're a frontier investor, you're probably invested in Vietnam. It's about 30% of the Frontier Index. But if you're an emerging market investor, well, you may not be invested. We hope that by as early as 7th of October, Vietnam may get upgraded to the secondary emerging market per FTSE Russell. And that could have two or three benefits. One, obviously, an immediate flow of more capital as emerging market index funds have to allocate to the economy. Secondly, perhaps people have been waiting on the wings to see, is reform happening and are the capital markets deepening? That's a call perhaps for them to start to do more research and allocate more actively to the market. And then thirdly, the benefit is to the local investors in Vietnam, that they will probably see a re-rating of some of the stocks. And that encourages entrepreneurs maybe to look at the capital markets to do IPOs of their businesses. So you might get a broader range of companies to choose from. So that's for FTSE Russell, and the Minister of Finance is quietly confident that the upgrade will happen. And actually, it's not so much about when it happens, it's about the commitment of the government to enable it to happen, to put in place reforms and regulatory changes to make this a possibility and a reality, we hope, this quarter coming. But those reforms benefit all investors. And the longer term goal is probably also MSCI emerging market status, but that's still a few years away, maybe 28 and possibly 30, it might actually eventuate. But so we're hopeful that FTSE Russell will happen sooner than later. So the equity market is a dynamic place in Vietnam. It's volatile at times, and that's partly because it's driven by around about 11 million domestic investors in Vietnam. So driving the daily volumes in the market to between 1.3 and almost $2 billion a day, making Vietnam the most liquid market in Southeast Asia. It's got a daily liquidity that's 10 to 20 times that of the Philippines, which is already an emerging market, and significantly above many of the other markets in Southeast Asia. This has been a tremendous transformation over the past 5 years, whereby people have had digital technology to enable them to open bank accounts and stock trading accounts readily, greater flow of information made available to them through digital media, and a greater interest in investing for their well-being and their longer term in Vietnam. So Vietnam is really punching above its weight, and recently the index has been touching record highs, but we see that emerging market upgrade could generate even further interest both from foreign investors and give a re-rating to some of those domestic stocks. So sentiment is good, and this year the market's touching great levels of growth. For us at Vietnam Holding, as I mentioned at the beginning, we're trying to do simple things well. It's an exciting market in itself. There's enough opportunity without having to use clever financial engineering. So we're a stock picker. We like the kind of great macro top-down themes, but we're bottom-up, looking at companies that can deliver compounding earnings, looking at management teams that will be transparent and open with investors, boards that will listen to us and others about adopting newer, better forms of governance, being nimble of themselves and ready to change as global regulations change. And we've selfishly used ESG for many, many years as a tool to deliver that. So we were a very early adopter of the UN's principles for responsible investing and continue to get high scores each year when we are scored on that methodology. But for us, it's about engagement with our companies, engagement around why investor reporting is important, why having independent directors is important, why communicating with minority investors is important. And that raises the opportunities for everyone. So being on the ground, having that close engagement is very important. We're a disciplined investor, but we're also nimble. Our size means we can invest in small, medium, as well as large companies, and we adjust to market conditions. This year, we've been increasing our allocation to banks. That one of the earlier speakers said, how banks can position themselves great for growth. And in Vietnam, some of our banks are growing at 15 to 20% in terms of earnings per share growth, and yet still on relatively acceptable valuations, about 1.5 times price to book. There are about 50 banks in Vietnam, and we've got 6 or 7 in the portfolio this year because we're identifying them as being great benefits of the economic growth and the restructuring that's come through into the economy. We're also big believers in the value of the growth in the domestic consumer, and so we're looking at companies that could operate both in traditional traditional bricks as well as digital clicks. And many of these are punching above their weight, not only in Vietnam, but some of them are heading out into other parts of Southeast Asia as well. So in our portfolio, which is reasonably concentrated, top 10 positions account for just over 60% of the portfolio. Banks feature as well as retailers. We have also a company, Huafat, which we've known for many years and has been nudging its way up our top 10, which is a large producer of steel. It's Southeast Asia's largest steel manufacturer. And obviously for the growth in the infrastructure in Vietnam and for the growth in the urbanization, building houses for the millions of people that are moving into the cities over the next few years, increasing that urbanization, you need high quality reinforced steel bar or rebar. As you electrify the country's rail system even further and put in high speed rail networks, you need more steel. So obviously that's a potential opportunity and a beneficiary of that. In the last year, we've also reallocated more to domestic real estate. It was in the doldrums for 2 or 3 years, and we were strategically and tactically underweight. So we benefited by being underweight during that period of quietness in the residential real estate market. But it's coming back, and we're seeing a lot of freeing up of the rules and regulations, which are enabling the developers to deliver product to the hungry demand that's been already there for many years for high quality residential properties. And so we're seeing good demand and buyer demand. And that also flows through to the banks in terms of consumer loans and mortgages. So our valuation is attractive. We look at growth at a reasonable valuation. So we're looking at a 10 times price to earnings for next year, despite looking at 18 to 20% earnings per share growth. And I mentioned that nimbleness. Some of our companies, although 2/3 or 3/4 rather above $1 billion of market capitalization, that's because the market's really grown in the last 5 years or so. Some of our businesses were small, medium-sized firms, and now they're north of $1 billion. So we're active and interested across the opportunity set in Vietnam and super focused on the equity market and totally focused on Vietnam as a geography. And our nimbleness has led to outperformance. So there are 3 London-listed Vietnam funds, and we're leading the pack over the last 5 years, both in terms of our share price performance, but as I also mentioned at the beginning, our narrow discount to NAV, narrowest of the 3, but still providing opportunity for investors that are looking perhaps to add some further diversification to their portfolio. So diversification is free. Allocation is not. You have to choose who you want to partner with and hopefully find good trusts that will deliver value to you and be responsive and open. And we certainly want to be. So if there's any information that people need, there's plenty of information on the website, and we're always open to talk to investors. And with that, perhaps we'll go to some Q&A.
Yes, great. Craig, thanks so much indeed. I said earlier on in the presentation this morning that we would doubtless come back to this point about Vietnam and the reporting of its potential upgrade to an emerging market from frontier market. In fact, a couple of questions have come in on this. There's no one's really going to be surprised about that. Just a quick update. Do you expect a wave of capital into Vietnamese stocks on an emerging market upgrade? What's your thought on how you're going to prepare for this should it come to pass, or is everything being done now? It's just a question of waiting to open the doors.
Well, I wish. No, I think it's much more nuanced than that. I think, you've already got 30% of the frontier investors are in the market. And then when it becomes an emerging market, some people then have to make a choice. Do they allocate to Vietnam or not? Maybe it's 1 to 2% of the emerging market universe. And so it's still got to stand on its merits. So I think we'll see an initial flow, more perhaps modest, $1 billion to $10 billion as people reallocate their positions over time, over the next 12 months or so. But I say the most important thing is the regulatory reform that has got the country to the position where it's met all of the requirements, and hopefully the rating agencies will actually move it to emerging market. Those reforms will benefit all investors, and we could see some re-rating of the stocks, and that helps the domestic market as well. So I think it's all a positive push. It's probably an initial allocation from those passive funds. But more importantly, there's many active investors that perhaps are waiting in the wings. And this is seen as a positive first step towards greater market readiness and greater level playing field for foreign investors. So the government take this very seriously. And so it's not whether they get in on October 7th or not, it's that they have the ambition to deliver the reforms and the changes to law, the changes to regulatory obstacles perhaps in the past to make this happen. And that's the benefit, I think, to all investors.
Yeah, you have to forgive me on this because I think I've got the handle on this one. One question's coming. I've followed Vietnam's growth in retail traders. Has this increased growth continued? And as a supplementary question to that, the question asks, FTP used to be the top holding. What's happened there? I think that might be FPT.
FPT, yeah. No, look, two great questions. So, yeah, look, in the 5 years, the daily liquidity has gone from 200 million a day to close to $2 billion a day recently. And that's driven by the growth in the retail investors, which continues at a strong pace. That's also up 5-6 times in the last 5 years. And in terms of FPT, yes, well spotted. It used to be our number one position. It's still in our portfolio. It's a great company, but we've enjoyed a great return over 10 years from FPT. It's been a multi-bagger. And as a closed-end fund, we need to take profits and reallocate to other names as well. So that's what we've been doing during this year. We've taken some profit from FPT. Also, perhaps a pause is warranted as good companies like FPT also have to face what's happening to AI and how they're going to win and deliver value. And as one of the earlier speakers said, there's still some uncertainty around AI when companies see the return on investment and also what the impact is on software developers when you've got these amazing coding tools that enable you to do a lot more without having to outsource. So it's a great company, good earnings, but we've taken some profit and we've allocated to other names in our portfolio. But it's a well-managed business, so we rate it highly.
Yeah, you mentioned text. Just to quickly update us as well on your thoughts on AI, how that's going to push things along in Vietnam. What's the exposure like? What's the potential like for AI as a part of the investment consideration when looking at Vietnamese stocks?
Well, the Vietnamese are very tech savvy and they're very entrepreneurial. And so it's no surprise that many of the top AI gurus have been coming to Vietnam to provide training, to also look at investments in Vietnam to make sure that their technology continues to be AI enabled. Many of the banks are using these AI tools. They're already very digital. We tend not to see too many standalone. There are a few standalone kind of Revoluts or the equivalents in Vietnam. More we see banks using technology to deliver product and service more efficiently and effectively. So I think it's still early, but we'll see a lot more AI entrepreneurs in places like Vietnam because they're super good at coding and maths. And at the heart of it, AI is a maths puzzle to be solved through engineering and coding. And the Vietnamese are some of the best people in the world for that. So I have no doubt that as AI develops, you'll see Vietnamese entrepreneurs working on some of these problems and opportunities in AI. We have no pure play AI in our portfolio, but we have businesses that are obviously taking advantage of the benefits of AI. And then companies like FPT that are looking at how they deliver AI solutions to their software customers throughout Asia.
Talking about puzzles to be solved, questions come in, no real surprise on this either. Growth looks unimpaired by tariffs, but the question goes on, do you think there will be consequences down the line? Not quite sure what consequences are being alluded to there, but what are your thoughts on tariffs and how is that going to fold out? Of course, you mustn't forget the closeness geographically of China, and China is in the crosshairs of the US on many aspects at the moment. How is Vietnam coping with the tariff environment?
Well, look, Vietnam set its stall out to be an open trade economy, trading with many countries and nations, 17 free trade agreements. And I think like most open trade partners were surprised at the level of tariffs that were discussed in April in the Rose Garden, and the equity markets tumbled 20% in 3 days as a result, but have recovered rapidly and recovered all those losses as the reality has perhaps emerged a little bit more clearly. What it's made Vietnam do is focus on its strengths, its domestic opportunity, but also to broaden its trading partners. So a lot of work around EU, Middle East, and Asia Pacific markets, but then also to be pragmatic and see how it can trade more with the US, to be seen as more of a partner. And it's been looking to buy a lot more American soybeans and sign up deals to buy American planes for its aircraft fleet, and looking at American LNG for its energy demand. So, I think there's still a long way to go on where how these tariffs bite in ultimately. The net tariff is about 20% for Vietnam. There's a special category if they're accused of just transshipping Chinese goods and putting a made in Vietnam label on. That's a higher tariff, but that's probably less of a real issue. So it remains to be seen. Many of the categories are exempt from tariffs around technology. So if big tariffs were placed on technology opportunities, that would be more of an issue. But Vietnam's navigating through it, and the market's moved on already. But we keep a close eye on any new developments on that front.
Just finally as well, talk a little bit about liquidity within the fund that you manage. The question says, how can Vietnam have more liquidity than Singapore? I'm not sure. If you said that, I missed it. My apologies. I couldn't see it in your presentation. But just explain a bit more about the liquidity issue.
Well, Singapore, great country, great nation, but the stock market's been pretty dead for many years in terms of liquidity. Out of Southeast Asia, Thailand was the most liquid stock market for a number of years. Thailand's had its kind of every 5-year political issues, and Vietnam's domestic economy has been surging, and the domestic investors got really excited. So that's why they've pushed Vietnam to close to $2 billion a day in annual trading through the stock market, which is the highest in Southeast Asia. I say probably 20 times the level of the Philippines. So that is retail driven, and Vietnam's got 11 million domestic stock investors versus Singapore only has a population of about 4 or 5 million in total. So of course there's more activity and flow there. Singapore and others are trying to use their position as financial centers, and Vietnam's taken note. And Vietnam has these very ambitious plans to create its own international financial centers, to put in regulations that make digital assets more readily tradable and used in finance in legitimate means, to deepen its capital markets. And when you ask the Minister of Finance what their model and their ambition is, it's, well, we want to be Singapore, or we want to be Hong Kong, or we want to be Dubai. So one thing about Vietnam is they're forward thinking and resilient. And when they set their minds to difficult challenges, there's no end to their enthusiasm to see those put into place. So it's a great market to keep an eye out for the next 5 to 10 years.
Just one final, very quick question comes from me. You mentioned earlier on about you do simple things well. You're a stock picker. What's your churn rate like?
About 30%. We're nimble around the portfolio, and this has been a changing year. So maybe this year's probably been about 35%. So probably about 35%. We also, on liquidity, the portfolio is very liquid, and we have an annual redemption opportunity for investors. And we just fund that by selling shares and being able to return quickly proceeds to investors. So we're nimble, and the market's reasonably liquid, and we're able to find good opportunities, good growth at reasonable valuations.
Brilliant.